Hello everyone, today I'm going to be talking about CCIV stock and Lucid Motors for the long run. But before we get started, just give me a favor and subscribe to the channel, and without further ado, let's get started. Investors looking up Churchill Capital IV's market value will find a company worth just $7.5 billion, a tempting target at first glance. After all, Tesla's $650 billion market capitalization is almost 90 times higher, and Lucid Motors CCIV stock's planned merger partner looks like one of the most promising electrical vehicle companies of the decade. CCIV's low market value, however, comes from a quirk in SPAC accounting. The actual value of Lucid Motors sits at $47 billion, or almost as much as Ford. Here is why this EV startup is worth that much and what investors should expect next. Many novice investors might have assumed the merger would leave CCIV in control of Lucid, but they were wrong. When Churchill Capital IV announced its merger on February 24th, CCIV shareholders realized they would receive only 16.1% of Lucid. Shares of CCIV went up from $22 to $64 within days only. CCIV only had $2.1 billion cash to invest, and the experienced dealmaker could not have possibly acquired a more substantial Lucid stake without a merger checkbook. Even now, CCIV still sits at a 200% premium to its cash on hand. So many investors believe that Lucid Motors is worth $47 billion. To calculate that, investors should take CCIV's $7.5 billion value and divide it by its 16.1 stake. That's make Lucid worth $47 billion. Many experienced investors would cringe at such a high valuations. A $47 billion puts the pre-revenue EV maker in the same league as established makers like Ford and Honda. Such a comparisons, however, miss an essential point, and this point is Lucid is not a legacy automaker. The global automotive sector generates more than $5 trillion in sales annually. Legacy automaker combined are barely worth $1.5 trillion. CCIV could potentially reach $100 by 2024. The firm already has a world-beating design for its planned vehicles, a combination of solid demand, tax credits, and excellent management might well come together and send Lucid stock to a $160 billion aggregate value. But the alternative is equally likely. Competitors from Fiskars to Chinese-based NIO could steal market share. Even BMW might get its fully electrical vehicle lines to compete. That could leave CCIV stock stagnating for years, even if the company finds reasonable commercial success. Regardless, investors should not view CCIV stock as a $7.5 billion company. Instead, it is Lucid's $47 billion value that ultimately matters. And if that figure can grow, so too can CCIV stock. That's it for today. I hope you enjoyed the video. Until the next time, see you next guys.